introduction to petty cash. A petty cash fund is an amount of cash kept on hand by a business to pay for minor expenditures. It can include things such as postage or office supplies. It is a basic control activity allowing a company to better manage its cash outflows. It involves 3 activities: establishing the fund, making payments from the fund, and replenishing the fund. Establishing the fund. This is Bob. He owns a donut store called Bob's Donuts. To establish his petty cash fund, Bob must write a check for the amount of money he requires, which in this case is $150, and then must cash the check at the bank. Now, as Bob likes to work in the donut store, he places the cash with his accountant Belle, who is now known as the custodian. Bob would then record the following entry on the 1st of November of debiting petty cash for $150 as it is increasing and crediting cash for $150 as it is decreasing. Cash can then be taken directly to pay for items, or employees can seek reimbursements. Making payments from the fund. Journal entries are not recorded when payment is made, only when the fund is replenished. In the month of November, the following payments are made: $40 worth of office supplies for the purchase of a calculator and a printer, $50 worth of postage, and $25 under miscellaneous, totaling to $115. Replenishing the fund. As the fund decreases, the fund must be replenished. The receipts in the fund are then used as documentation for recording expenses. To replenish the fund, the remaining cash is counted and a new check is cashed to bring the amount back to its original size. On the 1st of December, the following petty cash replenishment form is prepared. As shown, the petty cash fund began at $150, now with $35 remaining in the fund. The cash requested to replenish the fund is now at $115. This amount now matches with the total amount of receipts. Bob would then cash a new check for $115 and record an increase in the 3 expenses accounts and decrease cash. However, sometimes the amount of cash needed to replenish the fund does not equal the amount of receipts. This can be due to not obtaining all receipts or giving incorrect change. In such cases, discrepancies are charged to a temporary account called cash short and over. These can have either a debit or a credit balance. In our example, suppose Bella records office supplies at $35 rather than $40. This would result in expenses totaling to $110 rather than $115. Belle must then debit the missing expense of $5 to the cash short and over account, bringing the total cash required back to $115. We have now looked over the 3 activities of a petty cash fund, of establishing the fund, making payment from the fund, and replenishing the fund.